I'm George Ratiu, Manager of Economic Research with Realtor.com. Summer is almost over as schools are back in session across much of the country. Economic data point to surprising resilience despite concerns about a recession. We just saw the second estimate of real GDP for the second quarter, and it showed that the slowdown was less pronounced than initially measured. Figures were revised upward due to stronger consumer spending and private inventory investments. As July retail spending numbers confirmed, American consumers have not pulled back despite significant inflation. Meanwhile, orders for durable goods were level with the prior month in July. The slowdown in momentum came from unusually large defense orders in the prior month, which were absent in July. On the private business side, orders for cars, computers, and planes picked up, a clear sign that manufacturers have ample demand for products. Companies are keeping a keen eye on signs that the Fed's monetary tightening may soften consumer demand. For now, employers continue hiring. The weekly jobless claims numbers highlight that layoffs remain near record lows. Initial claims fell while the number of people collecting unemployment benefits remains near a 50-year low. With jobs and wages still rising, so are prices. The July Personal Consumption Expenditure Price Index, the Fed's preferred inflation measure, rose 6.3% from last year. The gain was smaller than expected, pointing to slowing inflation in the months ahead. The strong labor market offers solid cushion against recession odds, yet with prices still rising at a fast clip, the Fed will keep hiking interest rates until inflation gets closer to 2%. Real estate markets continue their move toward a new normal with clear signs of a slowdown. Mortgage rates saw another jump this week following the surge in the 10-year Treasury. The monthly payment for a medium-priced home is 61% higher than a year ago. With prices and interest rates slicing buyers' budgets, it's not surprising that sales of new homes dropped in July. The pullback was also echoed by contract signings for existing homes, which dropped to the lowest level since April 2020 at the height of the pandemic. The trends highlight that buyers have reached the limit of their financial ability to handle the impact of high inflation, house prices, and interest rates. In addition, Realtor.com's weekly housing figures show that after 2 months of rising new listings, homeowners are pulling back, worried they may have missed the market's pricing peak. The shift toward more balance is slowing as we head into the fall season. The other highlight of the week came from Realtor.com's rental report. Rents reached a new high in July, but the pace of growth has moderated noticeably, hinting at a reprieve for weary tenants in the months ahead. Stay well in these last weeks of summer, and we'll keep you up to date at our website and Twitter feed.